because many analysts believe that it will backfire and the bank will have to revert back to the ultra easing policies. Let's take a look at the daily then. This is what we're looking at today. This is today's. We have an A, B, of course, and the C. All right. That C has already done a 1 and a 2, internal 1 and a 2, 3, 4, and a 5, 3, 4. This is level 5 that we're doing. That level 5 has done a 1 and a 2 already with all these yellow labels. And this is what we're seeing and segregating on the 4 hours and other short-term, intermediate and short-term frames. We have a reversal trigger. We talked about this now for ages, but the market doesn't look like it's able to go higher. Reversal triggers are at the moving average. You're seeing these 200-point moving average. You're seeing two of these green triggers. They see bounces, of course, just below zero level on the 100-period CCI. The next, there are, of course, reversal triggers because the other bearish reversal triggers had occurred also at zero level, bounces downwards at zero level and at the 200-point moving average. So we should have traction to move higher gradually to 156. 156 is the next long-term target. I believe it is the one that is acceptable by the Bank of Japan actually to see, given the current weak stance that they're doing in policy. 127.2 is the projection from the top of 3 to the bottom of 2 in green. It takes you to 156.76. Moving on to the 4 hours and the intermediate term frames, we're going to be segregating this advance into 1 and 2 in white. We see that here on the 4-hour chart. This is today's again. This is at 1 and 2. We've had an internal 1 and a 2. We've had a 3 and a 4 and a 5. Internal level 1 has occurred. Internal level 2 is what we're seeing right now on all the time frames. That's why the market is going nowhere. So you see here you have an ascending triangle. Yes, we have a breakout on the sterling yen. Yes, we don't have a breakout on the dollar yen, just because of that sentiment that this is the one being targeted. Dollar yen is being targeted by the Bank of Japan for sudden intervention. So we are seeing a 1 and a 2, and we can consider this is really correct on a higher degree frame because you see your internal 1 and that bounce onto 0 is really a 2. But is it going to carry higher, break above the neckline? So a break above, yes, the neckline of this ascending triangle. Is it going to break above over both levels? Is a serious question, because inside of this ascending triangle, the last time we had a consolidation formation on 4 hours, it took a very long time. We'll check it when we go live. And inside of an ascending triangle, you can get an A and a B and a C and a D and an E, and it can go on indefinitely. And the market is, of course, capped by the Bank of Japan below 152. So it's really capped between 152 and 151. That's all. We rarely do 152, we just do 151.80, and the market rarely falls below 150.70. And therefore, we just have a 100-point cap that can just, it's like now it's a fixed market, and this cap can, of course, go on for a long time. So not beneficial to trade. What is beneficial to trade? If seriously, what is beneficial to trade is if a fundamental deviates, that impacts the US dollar higher, or a fundamental deviates that impacts the yen higher. So impacting the US dollar higher would mean that the bank is unable to go out of ultra easing and continue in the Bank of Japan, continue in the ultra easing practices. You can find a breakout, this green arrow. If, for instance, the bank announces that suddenly they've decided to hold an auction to buy 10-year treasury bonds in an unlimited supply. They always do this. Of course, then you see this. You see a break to 153 and 153.79. Okay, so that is a usual practice that they do, and it will, of course, influence the dollar higher. All right, also, you could get out of the United States very strong economic projections. Economic strengths that have succeeded in a soft landing would mean that you have more investment flow into the United States. Stronger dollar must show everywhere and will also show against the yen. So, of course, we get the breakout to the upside. So how to use this? You buy the lower boundary of the ending diagonal. This is going to take time. We buy the lower boundary of the ending diagonal. 150.70, 150.50 even. This is a positive swap, and therefore the longer you hold it, maybe it's a good vehicle to park money into it. Once we have that fundamental that should push the market to the upside, we enjoy the breakout, of course, to 153.20. Over here showing 153.22, 153.80. Let's take a look at now actual trade management. So we have that one, we have that two. I know I'm showing an A and the B and the C in white, assuming that two is finished. Well, not really correct. So we're showing an A and a B and a C in white. This is like A into 2. We're doing like B into 2. 1, 2. All right, so like B into 2 is going to be an A and a B and a C to do B, and then another A, B, and a C to do C before you get this move to the upside. It has to have a fundamental impacting it higher. We're labeling, of course, a breakout, 1 and a 2, 3. We don't believe there's going to be a breakout, but assuming we get a breakout in the near future, you want to buy the top of level 1 over here, or the low boundary of that ending diagonal in the first place. So top of level 1 takes you around 151.30. Over here we're seeing 151.13. The lower boundary is really 151, and even as low as 151.90, and these levels. We remind everyone that the breakout higher is going to have a limited target. We're looking at 152.30, we're looking at 152.60. If it's a very severe fundamental release, takes you to 153 and 153.20 before central bank intervention. The market is, of course, supported by strong U.S. economy and the past employment numbers. Strong NFP numbers means that people are constantly getting employed every month. What are they doing? They must be producing something, and therefore you're going to have higher purchasing manager indexes, higher, of course, productivity levels, means higher stock market levels, means higher investment, meaning higher cash flow into the dollar. We get the move, all right, pending, of course, the current fundamental. It still shows that here we are capped at 152.30, we're capped at 152.60. More important is always to accommodate for Bank of Japan intervention. So the Bank of Japan intervention, we cannot tell, of course, we are not insiders on the bank, but we had that sell stop at 150.90. We believe we can take it lower now to 150.50, 150.50. Let the market work a bit to the upside, buy the low boundary of that ascending triangle, park into it at 150.90, for instance, and 151, assuming we have a stronger US economy, stronger US inflation than in Japan. It will show on a stronger dollar yen. We get to 152.60, we get to maybe 153. Bank of Japan intervenes. I don't know if they're that strong, but they can be if they wish. So they crash the market down. We have a sell stop at 150.50, not at 150.90. We take this down to 150.50. Selling 150.50 takes you actually to 146, not even 141. You have to take out level 1 if you're interpreting. Okay, so our bias is to stand out of the longs altogether. They're not really useful. It's better to long sterling yen. So our bias is to stand out of the longs completely. Do not long dollar yen, not by a buy stop, not by a buy limit. Stand out, but we want to do the short. So our bias is just to hold sell stop at 150.5, right? Usually there's a stop loss to that sell stop at 151.5. All right, 151.5 is just about that level 2, or 152 at the most, 150 points higher. And we will have a target at 146. The yellow area is 148, but we take it to 146. It's a position trade, of course. All right, so let's take it live. Today, I believe, by the end of the week, So we're having sterling yen move all the way to 192.78, and dollar yen not really going anywhere. Okay, so by the end of the week, I believe we're going to be seeing 151 probably. Again, we would discourage about doing longs altogether. If we had longs, we had the opportunity to close them. Sorry, and still do have the opportunity to close them because the market actually made high levels as high as 150.90. If we have the longs that still hold long at 151.60, for instance, we should close them now or just have a target at 151.90, stand out and focus on the shorts, have a sell stop at 150.50. $150.50 showing right here, 150.50.